Yes, hello and welcome back to Onchain Reaction. I'm your host, James Bennett, and today we're going to look at Bitcoin on and off the chain. So let's jump into it here by looking at the difficulty rate, which has adjusted by the largest ever amount we've seen downwards in Bitcoin's history, a 28% adjustment. You can see in grey there the difficulty having stepped down for the third consecutive time, down now 43% from the end of May. That signals that a significant amount of hash power has been coming from China, which as of the beginning of June have said they will no longer support the Bitcoin miners. And so essentially we're seeing that hash power turning off, which has led to this sequence of downward adjustments in difficulty. Overall, a good thing for the network. It means that we'll have a greater distribution of hash power by geography, we hope, and that's something that we'll be looking into over the coming weeks and months. Now, on the blue line here, you can see the 14-day moving average of block times. Block times went up to 15 minutes per block. So if you imagine that that's a train that normally comes every 10 minutes, and all of a sudden in rush hour it's coming at 15-minute intervals, you can expect that there would be a big sort of build-up in traffic trying to get on the network. We did see that a little bit moving to the next slide here in fees. Fees now back up off that $1.25 million per day base that we saw a few days ago or a week ago, and that fees have been rising in response to those increased block times, but not drastically. If this was happening in, let's say, the January towards the middle of January, when Elon Musk started talking about Bitcoin on his Twitter, and then we saw 15-minute block times, I tell you, fees would have been absolutely exorbitant, something you can't even imagine. But given that there is relatively low traffic happening on the Bitcoin network at the moment, then fees are actually still quite low, even though there is a low throughput of blocks. Looking at the next chart here, transaction value, which is the amount of Bitcoin the dollar value of the Bitcoin settling on the network, has now broken below a $30 billion a week sort of support. You can see in December we sort of built a little bit of support temporarily, and then a few weeks ago found support again around 30 billion. Today we're about 29 billion rolling on the week, so we're seeing that number is falling. Now, of course, that is a price indicator, or includes price, and price you can see there in the green line, and price has been relatively stable around the $34,000 mark over the last couple of weeks. But now with traffic falling off, we can't see a huge amount of sort of reason to be positive about Bitcoin holding this price level in the coming weeks. So now a non-price indicator of the same sort of thing, how much activity is taking place in the Bitcoin network economy, velocity here. So velocity has hit historic lows. This is the quarterly velocity, so we're looking at it on a 12-week rolling period. We haven't seen this level since 2014, when Bitcoin was at $460. You can see it there highlighted with the black horizontal dotted line, and velocity of course in blue, touching there mid-14 again in 20. That was just before the halving period in May, and then again now at the beginning of, or now in the middle of 2021. Okay, so the network isn't looking particularly lively, but what about the fund flows? Well, it's a slightly rosier picture. Net fund flows are flat as miners' selling pressure has been easing. You can see in orange here, we're looking at the net fund flows less miner sales. So the idea is to see, how much new demand is coming into the market through funds and how much new supply is being sold into the market from miners. All proprietary Bitcoin fund data on and off the chain, coming from ByteTree and ByteTree Asset Management. This chart from ByteTree Asset Management, and you can see that really over that 90-day rolling period, we've been flat since about May, and that has been the same sort of time that we've seen price flat. So look, the way that we look at price at ByteTree, and I think that you should probably consider this too, is that it's a combination of the secondary market, which is what's happening on the chain, and the primary market, which is what's happening off the chain, and the fusion of those two different markets is ultimately what gives Bitcoin its price in the sort of mid to long term. So, breaking that fund flows down, I just wanted to look at a couple of the different products that make up the fund flows numbers. We've got Grayscale, which is a closed-end product, and Osprey. First, we're going to look here at Grayscale. Very interesting story at the moment in the news, which is that there are 140,000 GBTC shares that will be released in July into the secondary market. Now, this is not a primary flow because ultimately those Bitcoin have already been bought by institutions. They're in that number, 800,000 Bitcoin in funds that we saw in the last slide. And the premium or discount just reflects the demand from essentially the retail market once those shares are issued. So Grayscale is currently sitting at a 9% discount. You can see this chart here from also ByteTree Asset Management website, the link there at the bottom. And what we expect to see over the coming weeks as those shares are released into the market is that the discount falls even further down, maybe even to new lows below 25%. Now, there have been a few comments going around about what this means for the price of Bitcoin. Well, ultimately, it doesn't mean much since those Bitcoin are locked into that vehicle. This secondary market is really just, to be treated as a separate sort of environment. Just because we go down to a 25% discount doesn't mean that the Grayscale shares will actually go back to a NAV of let's say net asset value or a NAV of 0. It's very important to be aware that you shouldn't necessarily be buying this just because it's at a discount. It won't necessarily go back to a neutral position. Okay, last up is Osprey. I wanted to show you because it's also a closed-ended fund similar to Grayscale, but unlike Grayscale, it is seeing a premium and an increasing premium rising towards 20%. And just really interesting to point out here, Grayscale and Osprey are similar instruments. They are shares available to mainly US investors looking to get exposure to Bitcoin in their pensions in a tax-efficient way. Grayscale is at a 2% fee. Osprey is at a 0.49% fee. And perhaps that's why we're seeing this divergence. If you buy Grayscale Grayscale and Osprey, you're looking at a 30% difference. And neither of them actually allow you to redeem the Bitcoin. So, ultimately it's a question of where you think the sort of safest bet is. These instruments, in my view, are ultimately quite dangerous for the retail investor, and it's very, very important that you understand what the premium and discount means if you're going to be buying them. So please, if you don't understand, do feel free to reach out to us at info@bytetree.com. We'd be very happy to help explain that to you. If you can get access to an ETP in Europe, then I would look at the Coinshares physical Bitcoin product and the 21 shares Bitcoin product. Or if you're in Canada or can access the Canadian market, then of course you've got the likes of 3IQ ETF, Purpose ETF, which have essentially no premium and discount. So you're buying direct access to the underlying Bitcoin. Okay, that's it from me for now. Have a great week. And as always, if you have any questions, please do reach out. Thank you.